Have you thought about Forex trading? Foreign currency trading can be super challenging. Watch this video for 5 quick tips on how to get started. Hello and welcome back to another video with My Money Masters. I'm Cameron. Today we'll be going to the world of Forex trading. Have you ever been curious about trading foreign currencies? Thought it was too challenging, risky, scary, insert descriptive adjective here. Well, hopefully I can shed some light on this and make it less daunting. Specifically today we will define Forex trading, go through the basics of trading, and some benefits of trading Forex. Plus, I'll give you my final take on trading Forex as one of the ways to financial freedom. But before you start, please understand that I am in no way offering specific financial advice. This video is designed for informational purposes only, and I am not a licensed advisor. Please work with your licensed advisor before making any investment decisions. Now, that being said, I love starting off every video with an investment quote. Unfortunately, I don't know who said this, but I really like this quote. Some people say Forex trading is dangerous, but I say investing in anything with a lack of knowledge is dangerous. What do you think about this? I think it can definitely apply to any investment, not just Forex or FX trading, but I think it's an interesting quote to have. Anyway, let's get started on learning about Forex. Please remember to subscribe to my channel, turn on the bell for notifications so you can see what new video comes out. Also, please comment on the feed and what you liked and what I can talk more about regarding the world of investing, personal finance, and making money online. So, what is Forex trading? Also known as FX trading. Foreign exchange trading it's interchangeable with FX or Forex. But if you have a chance to travel in a foreign country, you've probably already started investing actually in Forex trading. It happens when you come across the various kiosks in the airport where you can buy dollars of the local currency. There's usually a fee associated with this. In addition, it's a tangible, physical exchange of one monetary vehicle for another. This is a form of Forex trading, but for this article, I'm just going to reference the concept of actively trading various foreign currencies at one time digitally versus a physical dollar exchange. The Forex market is the largest market in the world, but not often used in the general sense of investing by most investors. Usually this is because currency trading is considered much riskier than stock trading. The FX market is very active and involves somewhat complex trading strategies. So for this reason, most financial advisors would not typically recommend this type of trading to be suitable for retirement planning portfolios. It is my goal, though, on this video to introduce you to the world of Forex trading only. Your individual investment goals may vary, so I would not recommend or discourage Forex trading. Learn more and learn as much as you can about this. Now, that being said, investing in Forex trading can be very, very lucrative. In a general sense, Forex trading is betting on one currency going up against another. If you buy US dollars against the euros, you are expecting the US dollar to appreciate against the euro. The quoting process also looks a little different, which we can go through in the next section of quoting, though. So when I first started Forex trading, I discovered 5 things that were very important. If you want to have an idea what you're doing in currency trading, these 5 things were understanding the quote, various lot size, leverage, capital requirements, and the time factor associated with this. I put quoting first because ultimately you have to understand what you're looking at in order to trade it. When trading stock, you see a quote, 55.05 by 55.07. This means a bid of 55.05 and an ask of 55.07. This quoting of Forex is similar. However, you may see it something in the quote that looks kind of unusual, like it may say EUR/USD 1.20037/57. If we break down this quote further, we understand that the bid means the price at which we sell the investment, and the ask is the price we pay to buy the investment. So in the terms of currency quoting, the base currency, EUR or the euro, that's symbol for euro, is always on the left, and the counter currency is always on the right. The 1.20037 is in US dollars. So if we were selling euros, we would get 1.20037 euro per US dollar we were trading. Now, if we decide to buy US dollars, this is where the 57 comes into play. Since the base currency is at the 1.200, the ask is expressed as 57. This means that you buy the euro, we would have to pay 1.20057 US dollars per euro. Therefore, maybe an easier representation of the quote is the bid 1.20037, ask 1.20057 in US dollars for euro. So in essence, that 57 is just the tail end of the ask that you see quoted. The spread is the 0.0002. So very, very fine, small, incremental spreads. Every quote in Forex is expressed in a pair. You are always buying or selling the base currency, which is the one on the left. The purpose of the bid price being lower than the ask price when investing in Forex trading is for market makers or brokers to make money off the spread. They make money off of the difference between the bid and the ask. They buy your dollars at the bid price and sell your dollars to the other investors at the ask price, profiting off of the difference. Now, did I mention Forex trading was a little bit more complex than stock trading? Although, I will tell you the bid and ask concept is the same as in stock trading. In a previous paragraph or a previous talk that we just had, we talked about the bid and the ask. We saw that spread was that 0.0002 or 20 pips. Pips can mean percentage in point or price interest point. Pip is a standard way that Forex trading measures the movement of the quote. Typically, this can be translated into $20 of movement when holding a standard lot of currency. Now, currency units. A pip is simply this unit of measure based upon a lot size that you hold. Now, a standard lot is 100,000 units. Now, please don't freak out. Don't worry. Most individual investors trade in much smaller lots. In fact, most investors trade in mini and micro lots. It would not be a very good strategy for an individual investor to simply start with standard lot trading. It's incredibly expensive. Another interesting nuance that really needs to be called out about the various lot size in Forex trading is basically comparing it to stock trading. Because when we consider stock trading, we consider a lot of 100 shares. When you buy in terms of lots, so 5, 10, 15 lots would be 500, 1,000, or 1,500 shares, respectively. Now, in Forex, they have 3 lot sizes. A micro lot, which is 1,000 units, a mini lot, which is 10,000 units, and a standard lot, which we just said was 100,000 units. The typical lot size for most individual investors is a micro lot or a mini lot, 1,000 units to 10,000 units. To understand this pip movement on a micro lot, just move the decimal places 2 to the left. On our previous example, the spread would then be 20 cents or 0.2 pips. There's definitely a lot of information to take in here, and I would encourage you to do as much research, like I said earlier, as you can on this, and this is designed just to get you interested in the idea and the basics of Forex trading. In order to start trading Forex, the reason would stand that you really want to deposit some money. And a benefit of Forex trading is that the minimums to entry are actually very low. If you started with $100 buying micro lots, remember, when we buy micro lots, pips are equal to 10 cents. Move the decimal place. So when you are placing any stop loss on your trade and you want to manage your downside risk by a move of 2%, 2% of 100 is $2. So you would set your stop loss at 20 pips. That's the $2. Now, as with other investments, the potential for higher gains depends on the amount of risk that you take and willing to invest. Now, you can control your risk by putting stop losses, by putting trailing stops, and being able to mitigate the downside potential with unlimited upside. The other key advantage here is leverage. Leverage in Forex trading is a huge, huge factor. In a stock trading account, you may use leverage on a margin account, depends on what you're buying though, But in a Forex account, you can leverage almost anything. Plus, the requirement may be as low as 50 to 1, meaning that with every dollar invested, it purchases 50 units of currency. Using leveraged it's a highly risky strategy. But again, if you mitigate your risk by downside stops, you can potentially move faster through your knowledge. But it should really be used later when you're getting more comfortable with the trading. So as a seasoned trader, you may want to, dig more into the leverage side. But again, there's risks to everything. Now, here's the fun part. Why would you actually even trade Forex? What's the point? Is it any better than stocks? Is it any better than anything else that's out there to be able to trade? Multiple reasons someone would consider investing in the Forex market. There's the three most important, in my opinion, are diversification, time factor flexibility, and liquidity. So when using Forex trading as an additional tool in your bag, it spreads your risk overall. It's still in the paper asset category, but it's investing in currency versus stock. So it's a different asset class, if you will, within the paper assets. But if you're solely in the stock market, you may miss out on several factors that affect the company or companies in trading. Now, foreign exchange is hugely important with many of the U.S. companies. Foreign exchange affects the value of goods, services exchanged overseas. Trading in the Forex market is a good way to become diversified in an international way. Also, as a hedge, Forex can be useful, especially when trying to work against inflation. This is one that I personally feel equally passionate about as diversification, the time factor flexibility. Since the currency markets are worldwide, the Forex exchange does not sleep during the week. If you're an early riser, like me, maybe you want to get your trades in a Forex market at 4 a.m. or 5 a.m. Good 4 hours plus before the U.S. stock market opens. The only time Forex market is going to be closed is going to be on Saturday and Sunday. One of the various ways to test a viable investment is basically to confirm liquidity. If you can get in and out of something fast enough. Now, I did a post on my website, mindmoneymasters.com, regarding penny stocks, and I'm actually going to do a video of that next regarding penny stocks. But we discussed liquidity in penny stock in that article and how important it was in that market. Well, Forex trading is extremely liquid and trades all the time. This is a huge advantage if you want to get into a trade quickly or get out of a trade quickly. Since this market is international, you aren't focused on the specific sentiment of a company, more so the sentiment of a country, and it is the largest market in the world. Now, final take, something I want to wrap all this up for you. If all this scares you and you are more comfortable investing in the stock market because you don't know what you don't know, then, don't worry. I mean, these are just alternatives. Other alternatives, mutual funds, ETFs, they offer exposure to the currency markets as well. You can purchase an ETF that is a euro-based ETF. Work with your brokerage firm, obviously, to understand any particular advantages or disadvantages. Now, that being said, investing in Forex is an excellent option for many reasons listed in this video. One thing to consider prior to jumping with both feet into the Forex trading is that most brokerage firms allow a demo account. This is a way for you to use fake money and try it out. Most of these brokerage firms allow it. Get a feel for how things work in the Forex market and start using the fake money before you use your own money. I still firmly believe that this is only one category of ways to make money. There are 3 other assets in the main asset classes. Remember, the millionaires and billionaires have multiple streams of income. If you are going to start trading Forex, manage your risks effectively. Make sure you work with a reputable broker. Understand using leverage and learn about the economy for the currency country you are trading. Forex can be exciting and profitable addition to your portfolio. But in order to be truly diversified in your financial portfolio, you will need to look at all the asset classes. There are commodities, real estate, business ownership. I have a couple recent videos on gold and silver investing, and I would strongly ask you to check that out, but I would encourage you to get a side business, something else that you can do. You can do this as little as 30 minutes a day while working your 9 to 5 or 9 to 9, whatever it may be, but you get a secondary stream of income. Minimum secondary stream of income. There is a link in the description for you to check out a video from the exact same person that I learned from how to build a secondary side business. He's helped thousands of people build a business from the ground up. Please take a look. I wish you all the best. Cheers to your success. Happy Happy trading.